The richest man in the world is concerned about an economic crisis in the near future. Elon Musk might not be an economist who talks about finance and global financial crisis, but when he talks about finance, you need to listen. Elon Musk recently tweeted his predictions about the future of the US economy, and according to him, things are not looking good. In this video, we take a look at what Musk and other tech billionaires have to say about the US economy crashing and how we're going to deal with it. Stay tuned and watch. A few days ago, an American journalist named Christopher Miss posted a list of 936 startups valued at over $1 billion, typically referred to as unicorns. According to the tweet, there are 936 startups with a value of over $1 billion today. What do we think this chart looks like in, say, 5 years? Elon Musk replied to Christopher's tweet saying, "If history is any guide, not many will make it past the next recession." That's when one Twitter user chimed in with the question, "When do you think the next recession will be?" Elon answered, "Predicting macroeconomics is challenging to say the least. My gut feeling is maybe around spring or summer 2022, but not later than 2023. However, Elon didn't go into details to explain why he thinks so and whether this will be something like a Great Recession or only something ordinary. According to Doug Ramsey, Chief Investment Officer for Luthold Group, when the S&P 500 closed at a 52-week high last week, 334 companies trading on the New York Stock Exchange hit a 52-week low, more than double the amount that marked new one-year highs. This has happened only 3 other times in history, all of them in December 1999. What this means is that the U.S. stock market is at a high point. There are not enough new funds outside the stock market. U.S. stock funds are accumulated in the pools of a few leading companies, which means that the valuations of other companies are at a low level. Basically, financing has become a lot more difficult. On top of that, the Federal Reserve's monetary policy tends to be conservative. What this means is that the tight liquidity situation is increasing. Another Twitter user, Chris Smithson, believes that the inflation level in the U.S. has reached historic highs. An obvious sign is that the prices of goods and retail stores that he's observed have been rising in the past 6 months. Whether there will be a financial crisis in the next stage depends on whether the Federal Reserve can effectively withdraw from the quantitative easing monetary policy. This isn't the first time that Elon has predicted gloomy times ahead for the economy. Not so long ago, the Tesla CEO was in a number of highly publicized Twitter bouts with leading Democratic politicians. In his spat with Bernie Sanders, Elon called the senator a taker, not a maker. Alongside a joke about Bernie's old age, Elon also went on to comment several times about the impact on the government deficit on inflation and the inability of the federal government to control spending. In another tweet, Elon said inflation is the most regressive tax of all. Regressive taxation refers to lower income segments of the population paying a higher percentage of their income to tax authorities than wealthier people pay. People with bigger incomes pay higher tax rates in the U.S., but Musk's point is that inflation eats into the savings of average Americans and hurts people on fixed incomes like retirees the most. Usually, wealthy individuals aren't hurt as much by inflation because many have stock portfolios that rise in value. The super wealthy also have a greater ability to demand higher wages and offset rising prices. Unsurprisingly, Elon isn't the only prophet of doom in the tech world. Jack Dorsey is also very worried about some major issues facing the U.S. economy. In October 2021, the Twitter founder tweeted, "Hyperinflation is going to change everything. It is happening." Replying to his own cryptic tweet, Jack wrote, "It will happen in the U.S. soon, and so the world." As you might have guessed, hyperinflation is basically very high accelerated inflation. Researchers have documented 57 cases of hyperinflation as of 2018, with the first recorded episode occurring between 1795 and 1796 in post-revolutionary France. Some economists and writers have looked at possible hyperinflation in the U.S. as early as March 2021, when the economy started to get back on track after an artificially depressed year due to lockdowns and a ton of restrictions during the coronavirus pandemic. The term hyperinflation raised some dark images, with Venezuela being the most recent example and Zimbabwe as one of the most famous examples. A classic image of hyperinflation is, where people are carting around stacks of bills and wheelbarrows, central banks issue new currency notes with significantly more zeros, people run to the cash register with food before prices go up again, and retirement funds are depleted. It's a societal disaster, a nightmare. In that case, It's a good thing that many outlets and respected figures in the financial world were quick to oppose Jack Dorsey's stance on the state of the economy. ARK Invest's CEO Cathie Wood pushed back against Jack Dorsey's claim, tweeting, "In 2008-2009, when the Fed started quantitative easing, I thought that inflation would take off. I was wrong. Instead, velocity, the rate at which money turns over per year, declined, taking away its inflationary sting. Velocity is still falling." In a Twitter thread, Cathie argued that the price increases impacting consumers should wind down after the holiday season due to three sources of deflation. According to the ARK Invest CEO, the first source is technologically enabled innovation such as artificial intelligence. She also noted that AI training costs are dropping 40 to 70% at an annual rate which she called a record-breaking deflationary force. Wood also said when costs and prices decline, velocity and disinflation, if not deflation, follow. If consumers and businesses believe that prices will fall in the future, they'll wait to buy goods and services, pushing the velocity of money down. Cathie said that the second source of deflation is creative destruction as a result of disruptive innovation. Since the tech and telecom bust and the global financial crisis in 2008, many companies have catered to short-term oriented shareholders who want profits or dividends now. They leveraged their balance sheets to pay dividends and buy back shares, manufacturing earnings per share. They've not invested enough in innovation and will probably be forced to service their debts by selling increasingly obsolete goods at discounts. Deflation. The third source that Wood cited was the over-ordering and stockpiling of goods that have occurred as a result of the COVID-19 pandemic and supply chain issues. Wood tweeted because businesses shut down and were caught flat-footed as goods consumption took off during the coronavirus crisis, they're still scrambling to catch up, probably double and triple ordering beyond their needs. As a result, once the holiday season passes and companies face excess supplies, prices should unwind. Cathie Wood pointed out that commodity prices like lumber and iron have already dropped 50% and that the price of oil is still psychologically important. She noted that global demand for oil in 2021 was below its 2019 levels and unlikely to return to its old high, partly because its price had broken a string of lower highs and was above the $77 hit in 2018. Therefore, destroying demand that wasn't the end of Woods' thread, though she went on to say that on the supply side, environmental, social, and governance mandates have forced energy companies to shift spending from mature fossil fuels to renewables. Meanwhile, banks have deprived fracking companies of funding after their near-death experience in 2020. Cathie Wood concluded by tweeting in response to the near quadrupling of oil prices since the low last year, electric vehicle adoption has accelerated, sowing the seeds of a serious oil price decline longer term. Elon responded to Cathie Wood's tweet saying, "I don't know about the long term, but short term we are seeing strong inflationary pressure." Elon isn't the only billionaire who's worried about inflation. Ray Dalio, the legendary hedge fund manager, also believes that it's only a matter of time before inflation hits the American economy. When Yahoo Finance's editor-in-chief asked Ray Dalio how concerned he was about inflation, the billionaire responded, "I'm significantly concerned about it because of the amount of money and credit that has to be produced and is budgeted. It's a large increase." Ray Dalio, who runs the world's largest hedge fund, Bridgewater Associates, has been warning everyone about soaring inflation. He was louder than ever in November 2021 when an inflation report revealed consumer prices had their biggest gain in over 3 decades. In a LinkedIn post following that report, Dalio warned that raging inflation was eroding the wealth of Americans. He wrote, "Some people make the mistake of thinking that they're getting richer because they're seeing their assets go up in price without seeing how their buying power is being eroded. The ones hurt the most are those who have their money in cash." In his post, Ray Dalio cited a chapter from his new book, Principles for Dealing with the Challenging World Order, which argued that a decline in a nation's wealth is usually accompanied by diminished power. Dalio wrote, "There isn't an individual organization, country, or empire that hasn't failed when it lost its buying power. To be successful, one must earn an amount that is at least equal to the amount one spends." The billionaire hedge fund manager warned that the U.S. is printing too much money without raising its productivity levels. He said, "I've studied these empires, these dynasties going back over 500 years, and you see the same thing happening over and over again. When there's a financial problem and the coffers are empty, they print money, and when they print money, it devalues money. So how do you think the United States financial situation will turn out in 2022 and beyond? Are you concerned about Elon and Ray Dalio's prediction? Let us know your thoughts in the comments down below. Thanks for watching.